This week, Walmart, the retail giant of the U.S., delivered an unprecedented message to its millions of customers: brace yourselves, prices are rising. The source of this impending upheaval isn't distant factories in China, but rather, policy decisions made in Washington. The new tariffs imposed by President Donald Trump are not only disrupting international trade balances but also significantly straining American supermarkets. The critical question now is, if even Walmart, often seen as the last stronghold for budget-conscious consumers, can no longer absorb rising costs, how vast is the economic fault line exposed by this crack? We'll also delve into how international trade dynamics are cornering Trump, and explore Walmart's discreet negotiations with Chinese officials behind the scenes. It all began with an email Walmart sent to its members, unequivocally stating that price increases are inevitable. This was swiftly followed by reports from Axios and Bloomberg, revealing that Walmart had engaged in diplomatic-level talks, not just with Chinese manufacturers, but also with Vietnamese and Mexican suppliers, to renegotiate tariff terms across a wide range of products including agriculture, textiles, home goods, and cleaning products. However, the issue extends beyond simply rising import costs. It's also that colossal entities like Walmart are losing their capacity to absorb these escalating expenses. So, what are the concrete figures behind this emerging economic crack? Let's start with Walmart's recent financial performance. The company announced a turnover of $165.6 billion for the first quarter of 2025, representing a modest 2.5% growth. Yet, a closer examination reveals a significant drop in net profit margin, from 5.2% to 4.45%. This seemingly small shift translates to a net profit erosion of approximately $850 million. What's even more striking is that in the preceding holiday quarter, the last 3 months of 2024, Walmart hit a revenue of $173 billion and boasted a robust 6% profit margin. This implies that within a mere 4 to 5 months, even before the full impact of price hikes hit the shelves, Walmart was already facing a potential loss of between $4.5 billion and $5 billion in revenue. The crucial question then becomes, who will ultimately bear this difference? Walmart's management has explicitly stated that while they will absorb some costs, the burden will largely be passed on to the customer. According to American media data, between late March and mid-May, there was a 6% to 9% jump in prices for essential items like food, cleaning products, and personal care. For households on fixed incomes, even a few dollars increase on basic necessities such as laundry detergent and paper towels is putting a noticeable strain on their monthly budget. At this juncture, Trump's often repeated 2024 campaign slogan, "We are curbing inflation," flashes like a stark red alarm on Walmart's shelves. Our attention now shifts to Beijing. As the tariff list expands and costs climb, Walmart's message to its Chinese suppliers is direct: lower prices, or we will seek alternatives in other countries. The response from Chinese manufacturers has been equally unambiguous: we'll sell cheaper, but we'll cut quantities. Both you and we will lose. Meanwhile, Vietnamese and Mexican diplomats have intensified their lobbying efforts in Washington. A closed-door meeting between Vietnam's trade envoy and executives from giants like Nike and Walmart essentially outlined a roadmap for a China exit strategy. However, implementing this roadmap proves to be a logistical nightmare. Rebuilding supply chains isn't merely about rerouting transportation, it encompasses intricate details like packaging, quality control, tax refunds, and inventory management. In essence, it necessitates new setup costs from top to bottom. Moving away from China, in this context, simply means incurring new costs at another stage of the supply chain. Amidst this chaos, some are seeking opportunity. A dedicated team within Walmart is reportedly targeting small American businesses, proposing an expansion of their Made in USA product line. Wholesale agreements with local producers, ranging from shoes to olive oil, are now on the table. This initiative aligns perfectly with Trump's local jobs, local production slogan and could generate significant positive public relations. However, replacing Chinese goods, which benefit from cheap labor, with higher-cost American-made products, may not necessarily lead to lower final prices for consumers. On the contrary, a slight increase in prices seems almost unavoidable. So, while consumers might fill their shopping carts with the romantic notion of domestic production, they may ultimately pay more at the checkout. When national pride is weighed against the monthly budget, the wallets of most American families will inevitably tip the scale. Moving to the third stage, the behind-the-scenes political maneuvering, we find President Trump's assertive stance. Speaking to reporters after his Central America trip, the president insisted that retail giants like Walmart must swallow the tariffs and avoid falling into China's trap. In short, he expects the retail giant to absorb these increased costs. However, a different reality is being discussed behind closed doors. Walmart argues it cannot fully absorb these tariff blows, which it describes as body blows, because its profit margin is already constrained by intense competition from rivals like Target and Amazon. Operating for years on a low-price, high-volume formula, Walmart knows that squeezing its margins any further risks eroding investor confidence. To exacerbate matters, the billions invested in e-commerce are still in the return on investment, ROI, phase. While the e-commerce division is rapidly growing, its profitability has not yet matched that of its physical stores. In such a precarious situation, telling Walmart to swallow the tariffs is akin to instructing an oil tanker to continue despite running out of fuel. Let's pose a quick question. By the end of 2025, as Walmart's revenue approaches an estimated $670 billion, what percentage of its net profit will the direct burden from tariffs consume? Analysts anticipate a decline of up to 2 percentage points in the gross profit margin if the current tariff pressure persists. 2 percentage points translate to a loss of nearly $13 billion in gross profit, leading to a shakeup of $4 to $5 billion in net profit. This is a substantial bill that could jeopardize the company's share buybacks, employee bonus pool, and crucial supply chain investments. The CFO's statement at the shareholders' meeting, declaring that tariffs are the biggest challenge we face, was, in essence, a veiled SOS signal to the Trump administration. In the fourth step, we move beyond supermarket aisles and into the American kitchen. A middle-class family in Iowa reports paying an extra $5 every time they visit their weekly grocery store since the beginning of the year. Promotional bundles for items like diapers, detergent, and soap have been discontinued, forcing customers to purchase them individually. According to recent surveys, 60% of households have switched brands in the last 2 months due to price sensitivity. If Walmart's everyday low price promise loses its psychological barrier, customers might defect to Target's discount coupons, Aldi's low shelf costs, or Amazon Fresh's doorstep delivery campaigns. Walmart is acutely aware of this risk, but choosing not to raise prices comes with its own set of challenges: margin erosion, stock price declines, and reduced investment capacity. The fifth step represents a direct transition from economics to politics. Trump's staunch support for tariffs, often encapsulated in the slogan "China is robbing us," initially resonates with nationalists. However, there's an undeniable paradox: inflation is arguably the most sensitive issue for his own voter base. The core contradiction here is that instead of the bulletproof capacity that economics professors often discuss, consumer inflation is painting a picture of an uncontained problem. While Trump demands that retailers swallow the tariff, consumers are left wondering, who's going to fill my wallet? This dynamic poses the toughest battleground for the 2024 election campaign, defending the president in the face of rising price tags on store shelves. Moving to the sixth step, strategic forecasts. Walmart is actively expanding its e-commerce channel while heavily investing in its membership program, Walmart Plus. But let's be frank, would a middle-class family pay a $98 annual membership fee solely for free delivery? Would the millions of customers already subscribed to Amazon Prime willingly finance 2 premium memberships simultaneously? If Walmart Plus fails to gain significant traction, the company may struggle to find a way to offset the tariff burden, which could accelerate a second wave of price hikes. The seventh step brings us fresh reports from factories in Vietnam and India. Orders shifting away from China have not yet reached full capacity. With the significant costs associated with labor training, infrastructure development, and certification, the notion that production outside of China is easy, cheap, and fast remains a mere fairy tale for now. Moreover, China is not passive, it's actively trying to retain major players like Walmart by offering product-based discounts, freight support, and expedited customs packages. On the other hand, signals from the White House that the tariff list may expand are forcing major chains to devise new strategies. This could involve reducing the number of product categories they import from China and focusing solely on critical items. The practical outcome of this in the initial stage would be a narrower product range, fewer promotions, and consequently, higher shelf prices for consumers. In the eighth step, let's examine the investor front. Wall Street has historically favored Walmart as a defensive stock, a safe haven even during economic downturns, given that people will always need to buy essentials like bread, milk, and batteries. However, the current tariff situation has disrupted these calculations so profoundly that for the first time, investment banks are explicitly outlining the difference between a tariff-free Walmart profit scenario and a tariff-imposed profit scenario in their reports. One report starkly stated that if the margin decline becomes permanent, the 12-month price target for the stock will be revised downward by 10%. Is this ironic? No, because if the giant retailers' profits are eroding, investor confidence in the stock will inevitably decline. The ninth step highlights the direct impact on American small businesses. Walmart's promise to buy more from you sounds appealing, but in practice, the reality is complex. Small producers cannot suddenly scale up their capacity, largely because banks are reluctant to finance new facilities in a high-interest rate environment. Furthermore, establishing supply chain software, securing logistics contracts, and implementing quality control protocols all demand significant time and financial investment. So, even if Trump's tariffs create a lifeline for local producers, the number of businesses capable of meeting Walmart's stringent regulatory and volume criteria remains limited. This prevents the local supply solution from effectively stemming price hikes on store shelves in the short term. Finally, the 10th step addresses the breaking point of consumer psychology. Walmart is attempting to soften the blow of price increases by offering many products at promotional prices, as if its vast store network were perpetually running a semester break sale. However, a fundamental rule of consumer psychology dictates that when faced with price hikes, the immediate reflex is to reduce their shopping cart size, seek out alternative brands, or, if necessary, decrease their shopping frequency. So, as Walmart intensifies its strategy of passing on costs, it paradoxically faces the risk of a demand shock. This dilemma is as critical as a nuclear fuel crisis for the retail giant, fixing one problem while inadvertently creating another. Here's an intriguing question: how will this entire complex picture translate into the rhetoric on Trump's campaign trail? When the president declares China is on its knees, America is winning, will voters in Iowa perceive the increased cost on their grocery receipts as a victory, or will they weigh the direct loss in their wallets? This is where the concept of the wallet vote, a staple of political science, comes into play. Just as Clinton's "It's the economy" stupid slogan against Bush in 1992 shifted the balance of power, the phrase "prices, Mr. President" could have a similar, profound effect in 2024. A final anecdote before we conclude: Walmart's CFO recently stated during an investor call, "We are feeling cost inflation around 6%, and we don't want to pass all of it on to the customer." This statement implicitly means, we are a sponge, but with limited capacity. Will the government ultimately reconsider its stance on tariffs? If Trump backs down, it will undoubtedly weaken his campaign rhetoric. If he doesn't, giants like Walmart will accelerate price increases. In either scenario, Walmart's net profit margin could deviate by $3 billion to $5 billion by the end of 2025. And now, the ultimate question: does this price hike scenario genuinely concern only Walmart, or does it expose the weakest link in the invisible bond between the American middle class and President Trump? Consumers sometimes vote with their wallets. Economic rhetoric can quickly falter when prices rise. If the perception of affordable prices that has long made Walmart the fortress of the retail universe begins to crack, the politicians' victory march could also start to crumble in the background. What are your thoughts? Is Walmart truly helpless in the face of these price increases, or will the retail giant transform this challenge into an opportunity, writing a more profitable story? Is Trump's tariff strategy genuinely pushing China back, or is it, in effect, draining the American wallet? Share your perspectives below. Don't forget to subscribe to our channel, turn on notifications, and give this in-depth report a like. We'll see you in the next video, where prices are rising, wallets are shrinking, but we'll still be asking the tough questions.